The S&P 500 just hit another record high. But behind the headlines, something strange is happening. While everyday investors chase overpriced stocks, Wall Street's smartest money is quietly loading up on three companies most people have already written off. We're talking about beaten-down stocks trading 47% to 66% below analyst price targets, yet generating billions in revenue and quietly attracting massive institutional ownership. Harry stumbled onto them by accident, and what he discovered could change how you invest forever. Because these three value plays aren't just cheap, they're the foundation of real, lasting wealth. Let me show you why. Harry faced the same brutal reality many investors are dealing with right now. Everything in his portfolio felt overpriced. Tesla at 60 times earnings, Nvidia at 70, Microsoft at 35. Even the so-called safe options were trading above analyst targets. He was ready to invest, but there was nothing left worth buying. Sound familiar? This is what happens when markets hit all-time highs. Retail investors feel paralyzed, but professionals, they look elsewhere. They don't chase momentum. They hunt for quality companies that the market has unfairly punished. Strong fundamentals, clear recovery catalysts, institutional buy signals. These are the plays that quietly build generational wealth, especially for growth investors and passive income seekers. In this video, I'm revealing three of them, and they aren't rumors or hype. They're backed by hard data and deep institutional research. These aren't penny stocks, and they're not moonshot crypto plays. They're real businesses with billion-dollar revenue streams and serious investor backing. One generated $6.9 billion in trailing 12-month sales. Another pulled in $12.9 billion in just one quarter. The third? It's raised its dividend for 30 straight years. Yet the market is completely ignoring their upside. Let me show you why. This video is for educational purposes only and should not be considered personalized financial advice. All investments carry risk, including potential loss of principal. Please consult with a qualified financial advisor before making investment decisions. The first opportunity Harry discovered was hiding in plain sight. A company dominating the world's fastest-growing automotive market. A company with 86% user adoption of their advanced technology. A company approaching profitability while competitors burn cash. XPeng Inc. Current price, $18.05. Analyst consensus target, $24.40. Upside potential, 47%. Here's what Harry's investment research revealed about XPeng. July 2025 delivery numbers. 36,717 smart electric vehicles. That's not just growth, that's 229% year-over-year explosion. But the story gets better. 9 consecutive months with deliveries exceeding 30,000 units. Cumulative total deliveries surpassing 800,000 vehicles. First 7 months of 2025, 233,906 deliveries. That's 270% growth compared to the same period last year. Now, here's where compound interest effects become powerful. XPeng's international expansion spans 46 countries and regions. European market launches in mid-July 2025. G6 and G9 models gaining traction across multiple continents. The money management opportunity becomes clear when you examine the fundamentals. Trailing 12-month revenue, $6.94 billion. 2024 revenue, $5.66 billion. 2023 revenue, $4.32 billion. That's consistent top-line growth in a competitive market. Market capitalization, $17.21 billion. Current ratio, 1.37, indicating solid short-term liquidity. Cash position, CNY 33.63 billion versus total debt of CNY 12.0 billion. But here's the catalyst that could trigger explosive upside. Management explicitly targets break-even by Q4 2025. CEO XPeng. He expressed confidence that results could surpass forecasts. Gross margin improvements of 15.6% already reported by analysts. Strategic shift toward higher margin vehicles like the G6 SUV. The financial planning implications are significant. China's EV market achieved 49% penetration in Q4 2024, projected to exceed 70% by 2030. XPeng's advanced driver assistance technology shows 86% user adoption in urban driving. Institutional ownership tells the real story. Alibaba Group, holding 34.87 million shares. TMT, general partner, 32.73 million shares. Prime Cap Management, 14.38 million shares. BlackRock, 12.29 million shares. Vanguard Group, 10.97 million shares. Professional asset allocation specialists are accumulating. 103 institutional holders increased positions as of March 2025. But XPeng was just the beginning of Harry's discovery. The second opportunity shocked him. A fallen giant in America's most strategic industry. A company with a new CEO implementing the most aggressive turnaround in semiconductor history. Intel Corporation. Current price, $19.31. Analyst consensus, $34.44. Upside potential, 78%. Here's what most investors are missing about Intel's transformation. New CEO Lip Bu Tan isn't just cutting costs. He's executing IDM 2.0, the most ambitious semiconductor strategy in decades. Q2 2025 revenue, $12.9 billion. That's flat year over year, but here's the hidden opportunity. Intel's aggressive restructuring is creating a leaner operation. 15% workforce reduction targeting $17 billion in operating expenses for 2025. Further reduction to $16 billion in 2026. Capital expenditure optimization, $18 billion in 2025. The investment strategy becomes clear when you examine the catalyst. Intel's 18A manufacturing process launches Q4 2025. This isn't incremental improvement. This represents a technological leapfrog in semiconductor manufacturing. High-volume production scheduled for second half 2025. The market opportunity is massive. Global semiconductor sales projected $697 billion in 2025. 11.2% increase over 2024. Industry targeting $1 trillion in sales by 2030. Generative processors alone growing from $125 billion in 2024 to over $150 billion in 2025. Intel's foundry strategy positions them at the center of America's chip independence. The CHIPS Act represents $52 billion in federal investment. U.S. chip-making capacity projected to triple by 2032. Dividend growth investors should note Intel's commitment. Despite current challenges, Dividend maintained. Historical track record of returning cash to shareholders. Financial independence through contrarian positioning becomes compelling when you examine institutional support. 2,974 institutional owners holding 3.15 billion shares. That's 72% of outstanding shares. BlackRock, major position. Vanguard Group, substantial holdings. State Street Corp, significant ownership. Professional financial advisors aren't abandoning Intel. They're accumulating during temporary weakness. The retirement savings opportunity lies in Intel's strategic positioning. As geopolitical tensions increase semiconductor supply chain importance, Intel's domestic manufacturing becomes invaluable. Q3 2025 guidance shows improvement trajectory. Revenue forecast, $12.6 billion to $13.6 billion. Non-GAAP EPS guidance, $0.00, moving toward profitability. Non-GAAP gross margin projected, 34.1% to 36.0%. That's improvement from Q2's 29.7% non-GAAP gross margin. The third opportunity Harry discovered represents the ultimate passive income stream's potential. A company controlling the raw material powering the entire electric vehicle revolution. A company maintaining 30 consecutive years of dividend growth. A company trading at a 66% discount to fair value. Albemarle Corporation. Current price, $67.90. Morningstar fair value estimate, $200. Discount, 66% lithium prices crashed in 2024. Most investors panicked. Smart money management professionals saw generational opportunity. Here's what Harry's investment research revealed. Q2 2025 financial results tell a remarkable story. Net sales, $1.3 billion. Adjusted EBITDA, $336.5 million. Adjusted diluted EPS, $0.11. That beat analyst consensus estimates by $0.94. During the worst lithium price environment in years. Management's 2025 outlook demonstrates operational excellence. Expected positive free cash flow for full year 2025. That's remarkable given 2024's negative $0.955 billion free cash flow. Cost and productivity improvements, 100% run rate against $400 million target. Capital expenditure reduction, $650 million to $700 million range. The financial goals become compelling when you examine long-term demand. Global EV sales projection, 54.7 million units by 2030. Lithium consumption in EV segment, 12% annual growth through 2030. 2025 electric car sales forecast, over 20 million units globally. That's more than 25% of all cars sold. Current lithium prices around $9 per kilogram. Expert projections, $15,000 to $20,000 per ton by 2028. That's the wealth-building opportunity most investors are missing. Albemarle's integrated production network provides competitive advantage. Operations spanning Chile, United States, Australia, and China. Upstream resources including salt brine deposits and hard rock mines. Downstream refining capabilities across multiple continents. Tax-advantaged accounts should consider the timing. Current oversupply is temporary market imbalance. Structural supply deficit expected as demand outpaces production. The asset allocation opportunity becomes clear, examining institutional support. 877 institutional holders owning 113.14 million shares. Vanguard Group, 14.67 million shares. BlackRock, 8.85 million shares. Insider activity shows conviction. Last 3 months, 8 open market buys, 1 sell. Net insider purchases, 16,031 shares. 12-month period, net purchases of 79,799 shares. Professional financial planning recognizes Albemarle's dividend aristocrat status. 30 consecutive years of dividend growth. Forward and trailing dividend yield, 2.39%. Consistent shareholder returns through commodity cycles. The compound interest effect of reinvesting dividends during temporary price weakness could be extraordinary. Energy storage segment volumes up 15% in Q2 2025. Record production from integrated conversion network. Specialties segment revenue up 5% driven by higher volumes. Harry realized something crucial about professional investment strategy. The biggest wealth-building opportunities emerge during periods of temporary pessimism. When quality companies face short-term headwinds. When markets focus on quarterly results instead of long-term fundamentals. XPeng, Chinese EV leader with 270% delivery growth approaching profitability. Intel, American semiconductor giant rebuilding for next-generation computing. Albemarle, lithium producer positioned for commodity supercycle recovery. 3 different sectors. 3 contrarian investment opportunities. 3 massive upside catalysts supported by institutional accumulation. But successful financial independence requires more than just stock selection. Position sizing matters. Risk management determines long-term success. Diversified asset allocation protects against individual company risk. If you're serious about building long-term wealth, this is where it starts. Not by chasing hype, but by understanding value. The smart money is already moving. The question is whether you'll wait for headlines or act before they do. Hit subscribe if you want more deep dive research like this. And let me know in the comments which of these 3 plays you think has the biggest upside.